Chair at the Center for Latin American Studies. And I wanted to recognize first that this event took place really because of the vision and work of the working group that's affiliated with our Center of Graduate Students in the Department of Political Science. So for those of you who are here that are a part of that group, thank you very much for helping us organize this today. Ross Schneider is a professor, the Ford International Professor of Political Science at MIT, but most importantly, he received his PhD from Berkeley, so we're very happy that you've returned. He's also the director of the MIT Brazil and MIT Chile programs, and his work focuses on comparative politics and political economy in Latin America. And he's consulted for the Ford Foundation, the Inter-American Bank, and the World Bank. So we're very pleased to have with us here today Professor Ross Schneider, and he will be answering questions after his talk today. So please join me in welcoming him.
Thank you very much, Dionisia. It is great to be back. I only get back every couple of decades, so this is nice to have a chance. And I'm glad to see that the program in the Latin American Studies program and the Latin American Studies group in political science is still thriving. And I too am grateful to the Argentine Mafia for this invitation to come out. So, now, as this didn't come out quite clearly, but this is the latest picture of the latest demonstration in Santiago a couple of weeks back of the student demonstrations. And I want to start with this to sort of set up what I want to talk about. It's sort of, why Chile? Because Chile, we had demonstrations across the globe in 2011, from Tahrir Square to Madrid to Occupy Wall Street. In Latin America, the action was really in Santiago. There were 50 or more demonstrations with tens of thousands, sometimes hundreds of thousands of students and others in the streets. And it had a lot of people puzzled because this is a country that's supposedly doing among the best in socioeconomic terms in Latin America. The highest GDP per capita, among the highest growth rates last year, over 6%. They're doing very well in educational attainment, the top scores in PISA, and I'll get into that a bit more, and the highest enrollment rate for the college-age cohort. So almost 50%, close to what it is in the US and other developed countries. So remarkable. So why is everybody on the street? Why are they demonstrating? This is the puzzle. And I won't go into, there are a whole lot of reasons why people are on the streets, but I think there's a crucial one linked to the labor market. Two issues. One is that particularly among OECD countries, it has the sort of highest private contribution to tertiary education spending. So that's students and families taking on debt and paying for their education. So there's a real heavy debt burden there. And most importantly, and this comes from a recent study, they looked at recent graduates and figured out that for about 40% of them, it really wasn't worth their while to go to university. They were getting into jobs, low-paying, precarious jobs that weren't going to allow them to pay back their debts and fully amortize their investment. So I think this is a large part of what's going on with these demonstrations. So this is a question. Here you have a high-performing economy. Why isn't it creating enough good jobs for all of these graduates? Another way to look at this is a sort of broader picture of Latin America as a whole. And on a lot of indicators, things are going quite well. Again, growth rates are higher than they've been for a couple of decades, buoyed by the commodity boom. You have emblematic sort of signal events like Chile joining the OECD, sort of on its way to being a developed country. Employment has been growing across the region. By one recent headline called Brazil a middle-class country, because 60% of the population had now entered what they classified as middle class. Along the way, inequality is falling. Not so it's dramatically close to a lot of other countries, it's still very high, but the trend is definitely downward and steadily so. So that's all looking good. And this is more of the headline news. But then you look sort of scratch the surface or look below, look more at the micro level, and things are not going so well. So, crucial indicator of productivity, total factor productivity, has been lagging behind in Latin America, behind East Asia in particular, but also the OECD countries. And this is sort of a good measure. So Latin America has been growing, but it's sort of extensive growth. So making more of the same with the same procedures, more inputs and more outputs. Whereas rapid and sustained growth requires making more with less. And that's where the total factor productivity comes in. And it's not happening. Human capital is low, and I'll have much more to say about that. Overall investment rates, just gives you a sense of that. So Latin America is sort of at the bottom end here across regions. About 20% of GDP is invested. And you look at things, thinking about progress to the knowledge economy. If you target R&D expenditures, they run on average about 0.5% of GDP in Latin America across the region, compared to something over 2% for developed countries and 2 to 3% in East Asia. And also, if you start to look at some of these jobs, there have been a lot of job creation, but in many cases, most cases, the quality of those jobs in terms of the skills and the wages are not very good. So how do we understand this? Why is there this disconnect? This is where I want to, I mostly want to talk about skills and employment and labor markets, but I want to give you some setup, the overall framework that I'm working on here. And it's what I'm calling hierarchical capitalism. And this is to distinguish it from the sort of more better known examples of either liberal, market-oriented capitalism common in the Anglo economies, the US, the UK, Australia, and the coordinated market economies of Japan and Northern Europe. And what I see in Latin America are 4 key elements to this hierarchical capitalism. So on the business side, the private sector, the large firms, is dominated by multinational corporations and by large, diversified, family-owned business groups. So these are the core actors on the business side, and I'm happy to go into more of that in the discussion if you like. But I want to focus more on the labor side, atomized labor relations, and I'll explain more what I mean by that, and low skills. So that's the sort of the main components and their complementarities among all of those. And I'll focus in on a couple of them as they relate to the skills and labor markets. And this is taking one more step backward. So this idea of hierarchical capitalism is not just a sort of inductive view of Latin America. Who are the dominant actors? What are the core components of these political economies? But I think it also conceptually relates well to the other varieties that exist out there. And I would go so far as to argue that these 4 sort of exhaust the possibilities for alternative ways of organizing a capitalist and market system. So the liberal one is well known to everyone. The basic mechanism of allocation is the market. You have the spot exchanges everywhere from the stock market to relations with suppliers to the labor market. All of those relationships tend to be short-term and market-oriented. The coordinated market economy, you spend much more time in meetings. So you're meeting with unions, you're meeting with your banks, you're meeting with your suppliers, you have long-term relationships, you're meeting in business associations. So there's much more that's coordinated and negotiated. Then you have a more informal form of coordination, which is what I'm calling a network economy. And here, relationships are again long-term, but they're not formalized in sort of meetings and statutes and so forth, but it's much more informal relations and reiterated exchanges. So you think of the Japanese business groups, the keiretsu, held together by informal ties, or even practices of lifetime or long-term employment in Japan are non-contractual, but there's a sort of network or an exchange relationship there. Now, where you might see markets, negotiation, or trust as an allocative mechanism in other economies, you find much more hierarchy when you look at the economies of Latin America. And this is most apparent in the big business, where you're either a direct subsidiary of a multinational corporation, or you're a member of a business group that's hierarchically and totally controlled by the controlling family. So that's the sort of, think of that as sort of the general conceptual and theoretical framework. Now I want to zero in more on the labor markets. So the main things that are going on in the labor market, and these are averages for the region, we'll quickly see that there are a lot of important exceptions. Union organization is low, except in major exception of Argentina. Lower union density, and here I'm comparing it to the liberal market economies. These are developed countries, so the liberal economies and the coordinated economies. Labor market regulation, as you'd expect here, it's higher in Latin America than it is in the liberal economies. But what's surprising, or was to me initially, was that it's even more highly regulated, or as highly regulated as in Northern Europe and the coordinated market economies. Job tenure is extremely low, 3 years on average. So that means every 3 years, half the workforce is changing jobs, which is much lower than either the coordinated or the liberal market economies. And I think this is often ignored in lots of studies of Latin America, and I think it's crucial. Sometimes it comes up in publications as, oh, this is a positive sign that these economies are adjusting. There are new opportunities, they're shifting out of, particularly in the 1990s, they're shifting out of the old import substituting industries into new ones. But I think when you start to look at issues of skills, this becomes a real cause for concern. And of course, the informal economy is much larger in Latin America than elsewhere. So let me get into some of the skills, starting with education. So here, I don't know if you can read that, but everything's up. All the news is good. So this bottom line is Latin America. They've made a great deal of progress in terms of this is average years of schooling among the adult population. So that's going up. It's going in the right direction. But it's falling behind the educational attainment in East Asia, and sort of still on a similar trend to what's happening in developed countries. What's more worrisome is when you look at the quality or the actual attainment in education. So here, what you see in, does this help when I do this? No, you can't really see that. Okay, so the OECD average is close to 500. Latin American median is closer to 400. And that gap is about equivalent to 2 years of education. So that's sort of 2 years behind. This is all among 15-year-olds. This is reading. Here is math scores, and this is more across time. And what you see, Latin America is sort of rising in the early 2000s, but then sort of plateaued off. Again, with that sort of 80 to 100 point difference of about 2 years of education behind. Now, the final column here is also very significant. This is the proportion of students taking the test that scored below level 2 on the test. It goes up to level 6, I think. But what this means, and the OECD sort of classifies this, if you're scoring at age 15 below level 2, that means you're very unlikely to be able to go on to university or any kind of tertiary education, and unlikely to be able to get into a high-skilled profession. So this is sort of the danger group. These are the students who are not getting the kind of training that they're going to need in order to have high-skilled jobs later on. And then you could add in, too, that in terms of vocational training overall, Latin American governments spend very little. Okay, so why do we see this lag in education and skills? There are an important set of constraints, of course, on the supply side. Not enough schools, not enough teachers, and so forth. But I want to focus instead on what I think is often overlooked, which is the demand side. And here, you should think of a low-skill equilibrium. And it's a low-skill equilibrium because firms decide that they aren't going to invest in activities that require a lot of skilled workers because they know they're unlikely to find a big pool of them in the labor market. Individuals, on the other hand, watching firms, know that firms are not going to be hiring a lot of skilled workers and therefore adjust their investments in education accordingly, reduce their investment. Now, I'm going to argue that this exists, but there is no simple sort of direct measure of a low-skill equilibrium. So what I'm going to give you is sort of piece it together with partial data, looking at sort of demand on the part of business for skills, indicators of demand on the part of individuals for investing in skills and education. And you have to kind of keep in the back of your minds this sort of comparative and counterfactual idea, because there is a lot of investment going on in education in Latin America. It's just that it's not as much as it could be if you were in a high-skill equilibrium, or as much as is going on in countries that have that sort of high-skill equilibrium, which would be in East Asia or the developed countries. And so I'll look at a couple of complementarities in the labor markets, and then look at this business and individual demand. So first of all, if you look at the core components of the labor market, of course, informality, most employment in the informal sector is low skill, and there are few opportunities for either on-the-job training or increasing skill levels in the informal sector. And this is where I'll come back to the turnover, which I think has a crucial part, both in discouraging training within the firm. Employers know that workers are not likely to be there very long, so they don't invest in their training. Employees know that they're not going to be in the job very long, so they don't want to invest in the training. You could relate this in complementary fashion, too, to the high levels of regulation that encourage firms to not keep workers on for very long because the costs rise the longer the worker is in the job. And I'll come back to that, too. But it's also that it's not like you're shifting jobs within the same sector. Where I've seen data, and the Chilean data is very clear, that about half of workers who change their jobs move sectors. So they may have a job in construction, go into industry, get a job in retail. So they, too, don't have any incentive to invest in the skills related to any one of those sectors. And perversely, the turnover is higher among the lower income workers. So one study of Sao Paulo said 2/3 of workers had held their last job for less than 2 years. So there's very rapid turnover among lower education, lower income workers. And it's not just the small firms or the informal sector. Here I'll give an example, and I don't mean to pick on Camargo Correa. It's just that they publish this data in their annual report. So this is their workforce. 60% have 6 or fewer years of education. Their average job tenure is 3 years, which means the median is lower, and the annual turnover is 40%. Some of this is related to the fact that they're in construction, but they're also in a whole range of other activities as well. So let me turn to business now and say what would mitigate or reduce their demand for skilled labor. And first of all, partly because they're in this high turnover situation, that's reducing their demand. There also tend to be and I'm thinking now particularly of the largest corporations, and in South America, tend to be in lower technology production and exports, particularly now with the deindustrialization, the movement out of manufacturing, and the movement into commodity exports and production. And a lot of the employment, in fact, has been in the low-end service sector. There's also, and here it's, I'm going to try and do this without contradicting myself directly, but there's a lot of in-house training. So on the whole, if you look at this high turnover and so forth, there is low in-house training. Firms do not train. But if you look at the largest firms, the most capital-intensive firms, they have a core workforce that's in there for the long term. They have high tenure. So there's a small group of workers that doesn't go through this rapid rotation. And there is where you see a great deal of in-house training. But as I'll argue, the more in-house training you do, the less you sort of contract skills out in the labor market. So that, in fact, reduces demand for skilled workers because you're training them in-house. Okay, so this is again Brazil, and what it is among the top 20 largest domestic business groups in Brazil, 10 of them listed in their annual reports the educational breakdown of their workforce. So this is the where these data come from. And as you can see, if you're in services, banking, and telecommunications, they're hiring mostly university grads. If you look then at the capital-intensive commodity production, steel and pulp and paper, they still have a substantial university-educated cohort, but it's mostly relying on workers with secondary education. But if you go here to the more labor-intensive firms, they're relying primarily on a workforce that has only primary education. And this is important because these are among the 20 largest firms in Brazil. So these are the leading firms in these sectors, in the economy as a whole. Now, another way to get at what sort of the demand that firms might have for skilled labor is to look at R&D. And again, this is taking Brazil. These are some of the firms, leading firms in the region. And these are the 8 firms of the top 20 that listed some kind of expenditure in research and development. So the other firms, they may have had expenditures that they didn't report, but in many cases they probably did not have any expenditures. Particularly if you're in service sectors, you tend not to report R&D expenditures. Now, what you see here is that there are 2 firms, Vale and huge, and Itaú, which is actually not very big, but are making really substantial investments in R&D. So this is remarkable. But what's more important is the sort of majority of firms are really not doing much at all in terms of R&D. So very low expenditures there. And you might think, well, this is not going to have a great deal of impact on the overall labor market, which is true, because even if you're spending a whole lot, you're not going to directly hire many workers to work in your R&D department. But it has a sort of multiplier effect. If you're into that kind of investment and innovation, then suppliers, other subcontractors are going to have more skilled workers. The whole plant is going to have more skilled workers because they're going to be implementing innovations the R&D department is coming up with. So it just sort of is an indicator of the skill level at which the firm is going to be operating. Now, this is one of the things that it's hard to figure out. Is that why is labor regulation in Latin America generally so high in comparative terms? So here, this is a broader comparison. It's a slightly different index. All of their whole range of indices that sort of add together working time regulations, days off, overtime, severance pay, dismissals, and so forth. And there are various ways to combine them into an overall index, and they vary somewhat in the order of magnitude, but the range, but the rankings are always the same. Anyway, here what you see is in Latin America, and the bar there is the median, and the box is the 25th to the 75th percentile. So almost all countries in Latin America have a much higher level of regulation than you see in either the liberal market economies, low regulation, or the coordinated market economies. And these are Asian countries here. So this gives you a contrast to developing Asia. So much higher regulation there. And where you see it particularly in terms of costs is in dismissal costs. Okay, so it's much more costly to fire a worker in Latin America than either liberal or coordinated economies. And the other anomaly is to think, okay, so this is in comparative terms, but you also, if you look at sort of the Washington consensus, if you go through the 10 areas where they sought liberalization, from trade to price controls to taxation, all those areas of privatization, countries made significant, in the region, made significant progress in the 1990s. But there was very little movement on labor regulation. So again, the question is, why don't you see, in this overall context of liberalization, in a period when the right and business was sort of ascendant, Why wasn't there a greater push for greater labor regulation, deregulation? And I think it has something to do with this skills issue. If you do surveys, well, if you ask business people in Latin America, would you like to have fewer regulations, they will all say yes. But in fact, if you ask them to rank that, what's the biggest constraint on your operations, labor regulations are pretty low down, particularly for larger firms. So they're not very concerned with this. And I think it relates back to this issue of training. Okay, so if you're a firm and you're hiring workers, you don't expect them to have skills, but you expect to invest a lot in their training. And there was a recent IDB report that said that summarized the hiring practices as you hire for attitude, or generally what you think of aptitude, and then you train the workers. So you don't look for workers with a set of skills, you look for an aptitude. Then, of course, you face the classic problem of poaching. Once you've invested in the training of that worker, what's to stop that worker from going to your competitor and working for them? And this is where the severance pay in particular comes in. Generally, the way it works is that for each year you work in a firm, you're entitled to a month's salary if you're fired. So after 5 years and they fire you, you would get 5 months severance pay. After 10 years, you get 10 months. So what this does, in effect, is it raises the cost of leaving the firm. Okay, because if you leave the firm voluntarily, your sort of severance clock resets to 0. And you've lost this sort of what is in essence the unemployment insurance. Okay, so that gives you an incentive to stay with your employer. Of course, if some other firm is desperate to get you, they can just pay you that up front. But this is something that sort of gives the employer some idea that it's going to be costly for the worker to move, and that therefore it's worth investing in that firm, that worker's skills. And they do find, you know, if you look at the cross-national statistical studies show a correlation between higher levels of regulation and greater investment in in-house, in-firm training. Now, the implications of this are pretty interesting, because you think, first of all, as I mentioned, the more you're trained in the firm, the less that firm is hiring those skills in the market. So the less apparent demand there is for those skills, and therefore the less individuals would want to invest in those skills in order to get hired at that level. So in fact, many workers are out there looking for the jobs that will allow them to get the education they want, rather than getting the education they think they need to get the jobs. The other thing is that it shifts it has a political implication in that it sort of shifts the pressure for reforming the educational system in order to produce more people with skills. And I think I have time for this you can't see, but this is one of the dump trucks they use in the huge mining projects in Brazil or in Chile. So Vale, largest mining company in Brazil, was having a hard time finding enough truck drivers for these trucks up in the Amazon. So on their own, they developed a whole course. Here's the curriculum. Here are the things you need to know in order to drive this truck. Here's how you give the course. Here's the certificate you get at the end of the course. They designed this whole thing. They went to the government of Pará, the state government in the Amazon, and said, here's the course. Will you do the training? And the government said, no. We have a lot of needs, a lot of other things we'd like to do with our funds. You're a rich company, you train the workers. So they shifted it right back, and so Vale has to do that training in-house. So looking ahead, it's happened. So commodity-led growth. What does this mean for sort of the kinds of jobs that are being created? And what's interesting is sort of bimodal. So you have some commodity sectors like mining or mechanized agriculture that are extremely productive, extremely capital intensive, and very skilled labor. Okay? And this is just a chart of what's happened in soy in Brazil. So production has gone up something like threefold. Employment at the same time has gone down by 80%. and so something like 15, productivity has gone up 15 times. So this is overall great news, but if you're thinking about employment, it's 335,000 workers. It's just not very much in a country of 200 million. Generally speaking, in agriculture and mining in Brazil, it's 4% of employment. So it's still quite small, despite the commodity boom. In Chile, mining is 20% of GDP, but 2% of employment. So it's a very small proportion. But those are the good jobs. The other side of the commodity boom are the bad jobs, the labor-intensive ones that are low skill in things like meat packing, sugar production, and forestry. So that's the sort of bimodal direction. So there are many more jobs, many more of the low skill, lower wage jobs being created. And as currencies appreciate and commodity exports increase, you're seeing, again, this is Brazil, a deindustrialization. These are there's a shrinkage overall in the industrial sector, but in terms of exports, it's really striking. So this top one is manufactured exports, and the bottom is primary products. And those lines have continued on until now. Okay, now let me turn to the side of individuals. What are their incentives for investing in education? And what we have here is, this is the rates of return to an additional year of schooling. So Latin America here is about 6% increase in earnings, lifetime earnings for each additional year of school. But as you can see, that's the lowest among all regions, and nearly half of what it is in the OECD, and was more than half of East Asia, but East Asia is much higher. So that's sort of one indication that just the brute economic incentive is lower in Latin America than it is in other countries. Somewhat perversely, the returns to education in Latin America are higher for children from middle class and wealthy families than for individuals from poor families. It's the opposite in Asia, where the returns are higher for individuals from poor families. So this is sort of, if you segment it out, you have an overall level of returns to education, but if you're in a poor family, you're in a much riskier position. So that, there may be a good return overall to education. You may earn, on average more, but if you're from a poor family, you may think, well, I might get that, but then again, I probably won't. So it's probably, at least for some families, a disincentive for investing, particularly in higher education. The other thing that's happening, and this is just coming out. So this has been a shock to some people, because initially in the 1990s there was an increase in the returns to education, and people said, yes, this is what should be happening. So you open up markets, there's a return to greater skills. There's what's called skill bias, technological change as factories introduce new technologies. But then in the 2000s you start to see this downward shift. And there's a lot of noise in these are the lines for different countries of the region. There's a lot of noise in this, but overall, and in the majority of countries, returns to education are declining. And there are a number of hypotheses about what might be going on with this. Some people think, well, we've had a rapid expansion. Many more people are going to university and other tertiary education. So you're getting less well-prepared students. They're also going into many of them into private universities that are of dubious quality. So it's not homogeneous when you say what kind of education they're getting. So maybe that's sort of dragging the average down. The other thing I think, though, that's happening is with what we saw in the Chilean case, is that people aren't getting jobs, so that they aren't being absorbed. Some people say, well, this is, yes, okay, you've had a rapid expansion, so you've it's just an economic supply and demand thing. So you've saturated the market, that's all the market needs, so therefore the returns are declining. If so, it's happening at a very low level, okay? Because we're talking about, on average, 10 to 12% of the adult population has some tertiary education. So if you're already saturating the labor market at that level of a proportion of workers with that kind of skills, that means that you just don't have enough jobs to absorb more skilled workers. So again, this is another reason, I'm looking at this from the individual side, this is another reason to question whether or not it's worth investing in higher education. And as I mentioned, the other thing is that workers are more likely to try and get jobs that will get them the education rather than investing themselves. So that overall is what I'm calling the low skill equilibrium, where there's lower demand on the side of firms and comparatively and relatively low demand on the part of individuals to invest in skills and training. Now, this also feeds into politics because some people have asked, well, why don't you have, why isn't there a stronger sort of education reform coalition? You would think that there would be a natural coalition among those who have been excluded from education, among businesses who want more educated workers. And there has been, of course, expansion in education spending in particular since the return to democracy in the region. But you haven't seen a strong coalition. Think of this as a reform coalition for quality education, to do something about the PISA scores. And here I think what impedes this or discourages different groups from joining the work of such a coalition varies by each group. So the middle class or the wealthy, for the most part, have exited the public educational system. So their children are mostly in the private schools. So they don't want to have a sort of big push for education reform in the public sector. The poor, for some of them, it's, you know, there are various ways in which they've been disenfranchised, so their votes don't directly translate into preferred policies if they were to push for greater educational investment. The other thing, perhaps more striking, is that in public opinion surveys, they find that most people are satisfied with the existing education system. So 2/3 to 3/4 of respondents will say their educational systems are quite good. So they're not, this is across the whole population, but includes and then many who are poor, so they're fairly satisfied. So that's another reason that they're not pushing for educational reform. I have here but the CCT frustration. So if you take the conditional cash transfer programs now that exist through many countries in the region that are rewarding families for keeping their children in schools, they've been very successful in doing that. But now there's a growing concern, well, these people, they've stayed in school, now they're getting out of school and they're not finding jobs. So that could be related to the quality of the education they've received or to this problem of the lack of skilled jobs. Anyway, that could shift things to create more of a constituency for educational reform from these families who've kept their children in school and now are seeing that that didn't really make a great deal of difference. Business is not an active member of any kind of educational coalition. There have been a couple of think tanks created by business groups in Mexico and Brazil in particular have been pushing for education, but it's fairly weak. It's not something that business, if you talk to people in education ministries, you say, does business ever pressure you, or do they tell you what they want? And they say, no, they're just absent from the debate. And it's partly because they found private solutions to their skill needs, which is in-house training. So they don't need to really press for greater public investment. And the Vale example is sort of the exception that proves the rule. They tried to get this done, but then could not. And with the multinationals, of course, they base their decisions on existing pools of skilled workers. And if it doesn't exist in a particular country, they will shift operations to some other country where they can find those skills. then the last thing, just to close it out, is very over-determined, but politicians are generally interested in the easy part of educational expansion, which is building schools, inaugurating schools, hiring teachers, and so forth, but much less so in the usually very contentious politics of trying to improve quality, which usually brings conflict with teachers' unions. Okay, let me end up then with some speculation on what kinds of escape routes might exist for getting out of this low-skill equilibrium. And often people now, when they're looking at, well, are there countries that have successfully transited from a commodity-based development to sort of high-skill, high-tech kind of development? And the cases that usually come up first are Scandinavian. So you started out in raw materials and quickly moved into higher technology activities in a high-skill equilibrium. And the issue there is that they combined massive investments in public education with massive investments in private R&D. And the private R&D, the sort of emblematic case, well, now that it's not doing so well, not so emblematic, but it was the star example of this, was Nokia, which started out in pulp and paper and forestry, invested massively over decades in communications technology, and then came out in the 90s as the dominant cell phone maker. Chile, you would think of an example, you think, in this case it would be a sort of, the strategy would be a supplies shock. So what you do is just invest as much as you can in producing more educated students, and hope that, sort of with Say's law, that the supply will create demand. That then companies will see all this massive supply of educated workers and shift their strategies. Multinationals will come. But it's not the Scandinavian model, because it's much more private education and public R&D. So R&D expenditures are sort of up in Chile, but a lot of it is coming through the government. And the private sector response has been pretty disappointing. And I think I have time for this one anecdote. There was an exchange in the newspapers about 5 years ago in a magazine. The first article was entitled, "Why is La Papelera not Nokia?" And La Papelera is one of the largest pulp and paper firms in Chile, belongs to the Mate group, one of the largest diversified business groups there. And the article was sort of critical of La Papelera and said, you guys are not doing what Nokia did. You're just stuck in pulp and paper. You're not trying to get out of it. You're not investing in new technologies or new areas. But what was so interesting about this episode was that one of the Mate brothers wrote a response article saying, no, we're not Nokia. We're not Nokia because, in fact, we're the lowest cost producers in the world. Nokia had to move into something else because they couldn't compete in pulp and paper. But we don't have to move into anything else because we're the low-cost producers. So we sort of missed the point of that debate. But it does give a sense of what's going on in the thinking. And it is sort of very hard to get out of this. If you are the lowest cost commodity producers, then it's very hard to think of diversifying into something that is risky, out of your technological expertise, and doesn't have the same return as the commodity production. Brazil would be a case of what I think is more a demand-side shock. So there we see, in fact, now you're seeing a great deal of news reports about skill shortages. They've had what I'd call some luck in that a lot of the commodities that they're producing are more intensive in technology. So the whole ethanol production chain has a lot of industrial processing, innovation on the side of biotechnology, new fuels, resins, plastics, so forth, on the other end of the production side. The oil exploration, of course, because it is in such deep waters, requires a huge investment in technology and related industries, in logistics and so forth. So that's going to be had a very wide multiplier effect. They're working on this thing, precision agriculture, where you use GPS to determine the exact fertilizer and pesticide and watering, so that high technology in agriculture. So in this case, the commodities are sort of helping to generate a great deal more demand for skilled labor. There's also two other things. One is, and this is partly a supply side thing, but they're investing very heavily in science and technology for PhDs, turning out 10,000 per year. And this is uncharacteristic, because for the most part, multinational corporations do not do much of any research and development in Latin America or in developing countries generally. Some of that's changed now, where they're shifting to India or China. Within Latin America, the only place where you find significant R&D activities by multinationals is in Brazil. So that's also shifting from the demand side, demand for skilled labor. In this case, very highly skilled labor. But I would still say that neither of these shocks is really fully played out. If you think back to the first slides about the demonstrations in Chile, it could be temporary. It may be that model of just flooding the market with more educated workers will sort of equilibrate out over the longer run. But for now, it doesn't seem to be a clear solution. The demand side, too, it's too early to tell in Brazil, I would say, to see if these demand side shocks are going to really filter through the whole rest of the economy to move it up to a higher skill equilibrium. So I would still, even though these are sort of the more optimistic cases, I would still say for these countries and the rest of the region, the best way to look at what's happening with skills in the labor market is to start with the low skill equilibrium. So let me end there. Thank you.
Do you have time to field some questions?
Sure.
Okay.
Sure.
Did you have time to look at high-skilled labor imports from the amount of foreign workers being brought in some of those industries and discrepancies in between the countries, to see if perhaps that low-skill equilibrium was a lack of some?
Yes. I mean, are you thinking of particular cases or countries?
Let's look at Brazil, because I know within a lot of those high technology industries, you expressed, especially within the case of the oil giants that trying to go for the pre-salt and needing to bring in a field of experts there and within parallel industries. Do you see a larger demand for foreign workers for some of those high-skilled positions?
Yes, and you see that in the oil industry, and you see that, yeah. In fact, MBAs in the U.S. are looking at Brazil a lot. So they're on the high end. There are positions open in Brazil in the oil industry and in management overall. But I still think for the time being, it's still a very small number of people. I think for that group, it's sending a clear signal to students in Brazil. If you can get into the MBA or get into petrochemical engineering, that's an assured career track. So there, I think it's quite clear that there's going to be demand and sustained demand for the foreseeable future. But that's a very narrow segment of the overall labor market. Yeah.
Thanks for the presentation. It's really interesting. Can you elaborate a little bit about some characteristics of the labor market and how they work together? Because on the one hand, labor markets are highly regulated in Latin America. On the other hand, the job tenure is like really low, right? So how do these two things play together? Because if the labor market is highly regulated, one would think that it's very hard to fire workers, right? So.
Yeah, I mean, first of all, it's very highly regulated, but then you get into the issue of not the whole labor market is regulated. So then you have, of course, you have the whole informal sector, and then you have sort of a gray area where you may be partly regulated but not completely regulated. The standard view of the connection between regulation and turnover is, in fact, that regulation causes turnover. And they have World Bank studies that will show, for a small reduction in the index of regulation, you get an increase in tenure. I think that's part of the story, and I think you do have an incentive, particularly very short term, because if you fire somebody after, and they actually have studies in Chile that show this, if you fire them after 1 or 2 years and don't pay them severance pay, it's not worth their while to go to the labor court. So in fact, you get around the regulations. If they're there for 10 years and you don't pay them, then yes, it's worth getting a lawyer, you sue them, you go on. But I think the other thing is that and Argentina and Chile both did this, they introduced short-term contracts. So within the overall regulation, you can hire people for a year or a temporary basis. And then firms have found ways to use that to, in fact, hire their permanent workers on 6-month contracts and so forth. So that there are various ways to get around that. Did you have something else in mind with the connection between those two? No, and in fact, you get into some very interesting, there are other connections that are very interesting, because the IDB, stop me if this is too much, but they would, many people say, well, what you should have is unemployment insurance instead of severance pay, because that would allow workers, the firms, more flexibility in hiring and firing, and that would also give workers sort of a guaranteed source of unemployment insurance from the government. And they've done this in a couple of cases, and in Brazil in particular. But what they find out is that, and you have to be fired in order to be eligible for it, and there's a severance component as well. But what they find out is that, in fact, there's a sort of just strategic bargain where if a worker wants access to their severance pay or the uninsurance, they will go to the employer and negotiate to sort of fire me so I can have access to this, and they'll do some discounted severance pay. So there's a negotiation there that they can do. And then they find out they interviewed people who were on unemployment insurance and asked how many of them were working, and 80% were working. And of those, I think half even in the informal sector. So they come back into the formal sector with a new registration number. So unemployment insurance would be more rational from many perspectives, but it's just very hard to think about how you implement it. Yeah.
I knew a little bit about this, but I was shocked by this figure showing that Brazil's exports, the two curves were going in the opposite direction than one would expect from a party that is ruling and has some industrial inclinations, right? And I wonder what's your assessment about the debates within the PT about how this is turning out, and is this a story about unintended consequences of their policy choices? I mean, what is their political calculation about why Brazil is going to this direction, and do they like to do that? Do they want to change that?
Yeah, no, that I don't have a full answer to that. It certainly wouldn't be what, if you looked at the PT in the 1990s, in the 1980s, and sort of think, well, its real core base is in the industrial suburbs of Sao Paulo. That's where Lula came from, after all. How could he preside over deindustrialization? And there has been a reduction in the absolute numbers of workers in industry.
Due to technological advancement or the offshoring of some of those practices?
There was an initial round where there was an increase in productivity, a reduction in the workforce, just due to international competition. But then over time, particularly, you look at the number of sectors that are undermined by imports, or the number of exported industrial products that are no longer exported. That's a further sort of cause of deindustrialization. So you have the 90s was more the productivity increase, and the 2000s was much more the exchange rate. And there I think the politics are more complicated. It's sort of the exchange rate, it benefits a lot of poor families. So it's a broader kind of coalition, if you want, policy. I guess the calculus was is you sacrifice the sort of industrial base for an overall increase in the ability to consume among the poor. So I think that would be the basic. Yeah.
So, I was wondering what's the role for governments here or for politicians? Because I mean, there could be an incentive for politicians to have a reform, even if the middle class has the option to quit. If you reform education, they will probably support you, right? After you do that. Or if you give them like free education, it's really good in quality. It's something that the middle class goes to like.
Mm-hmm.
So why wouldn't politicians dominate?
If they don't have the job on the back end, if they're getting the education, don't have the job on the back end, which is essentially what we're at, right? If they're getting the education is then provided, okay, great political victory, but if there's no job succeeding that education, then
yeah, but I mean, what I'm asking is, like, are government interested in moving away from this equilibrium or not?
Right. And so, yeah, you could imagine at least, I don't know if it would be a strong coalition, but you could imagine some, and some middle class families are in the public sector. It's not totally private. Some might be attracted to more quality education in the public sector. And some businesses could be brought into that. So I agree there's the potential there to do it. I just haven't seen it yet. The other thing that's curious, and there's a good study of Mexico, is that you would think, well, if you're going to a private school, then you're getting a much better education and you're much better positioned in the job market. But in Mexico, the PISA scores for private schools are just barely above the public schools. So it's an interesting question there, what families think they're investing in private education for. The simple answer would be the sort of, yes, you do get better jobs coming out of that school because of the network effects. But it's not because of the sort of educational value added. But then you would think, okay, this should be a group that would be, well no, excuse me, that would be in a case where you'd say they would not want better public education because that's not why the education is not what they're after. They're after the exclusivity of the private school that gives them the network benefits.
I have a question. I thought it was interesting that you sort of started this presentation with this picture of Chile and what seems like a huge coalition fighting for quality education in Chile, and yet you sort of framed the puzzle as why there's no coalition for quality education. And then you also know that I study this humongous coalition of agrarian movements and union movements in Brazil that are also fighting for quality education in rural areas of Brazil. However, they wouldn't frame it as quality education for the job market. They would actually critique that notion. So I guess my question is why did you start the presentation with the movement in Chile? Is that not about quality? Or is that something different than the coalition you're talking about? And is it that there's no coalitions about education, but the coalitions that exist aren't necessarily about preparing people for the job market, but they're about something else?
Good. Remind me if I haven't answered all of those. Those are very good questions. But the Chilean case, yes, you would say there's a great deal of public support across a wide range of classes and groups for educational reform. It wouldn't, as far as I know, can include business, which is an interesting group that's outside of that. It's also, and this is where, because it's sort of this mass amorphous group with all sorts of, they're protesting everything from all kinds of legacies of Pinochet and the neoliberal model, and there's sort of general frustration with that, with the political system and its sort of closed oligarchic features and so forth. So a lot of people are on the streets for different reasons. So I wouldn't, And when they talk about how they want to reform education, partly it's a quality issue. But partly it's sort of the market model that they have in Chile with the voucher system, the private education, for-profit universities, and so forth. So those are the other things that are there mixed in with quality. So there's certainly a coalition for reform. But whether or not quality would be the main thing that they want to change there, I don't know. The other reason I started with it is because I think to me it's more of the limits. Even if they reformed everything and really improved quality, and actually the quality, if you look at sort of just the PISA scores, it's been improving steadily. It's not going to solve the labor market problem. So that was more the reason I started there. Your other point was about Brazil and whether or not education should just be for the job market.
Well, I guess it was just a more general question that maybe there are coalitions, but they're not framing quality quite in this way that you're framing quality as preparation for the job market.
But even in Brazil, you're talking about a fairly narrow set of groups.
Yeah, not businesses that
Right. So that's.
I wanted to just throw out another comment about quality. And so right now I'm looking at data from the salmon sector in Chile. And a colleague in Stanford has calculated the same numbers about how salmon production has increased, but the number of workers per kilo of salmon has completely plummeted. And you have this industry that justifies itself on its employment generation, but it's actually generating very little employment today. And so he's been doing ethnographic research on salmon production in Chile, and I've been doing research on the environmental regulation of salmon. And bringing our work together with this, I think that the why la papelera is not Nokia, the argument that one of the Mate brothers replied, I think is really crucial. Because one of the things that I'm finding in my research is that quality does not figure at all. So when they're looking at research results, when they're looking at data, and when they're thinking
quality
about their product, quality of
skills or
information
product?
and of the product. And so, to me, I think part of what it means to be a developing country is that quality doesn't matter. You're not competing on quality. You're always going to be competing on low cost. And so there's no pressure there to improve anything in a way. And that, sort of going back to how we're framing quality, I think that there's a deeper sort of conversation that needs to happen in countries like Chile about what do we mean by quality.
And do you know what happened with this? So employment overall went down. Do you know what happened with skill levels?
So you have very few management jobs that are increasingly concentrated in Puerto Montt. And then within the farm sites, the types of jobs have become more specialized. So you have sort of increasing hierarchy within the farm sites. And so you have this increasing stratification basically within the salmon sector with increasingly fewer jobs at the bottom and relatively more jobs at the top as managers, but those are still very few jobs.
Okay. I mean, I think it's sort of it's sort of the starting point. You may be only competing on price, but ultimately, I mean, it's sort of synonymous with development that you're going to then compete more on quality and differentiate your products. And sort of the story of Chilean and Argentine wine is that sort of story of improving quality. So that's the kind of thing you would be looking for in those sectors, which requires the sort of investment in skills and R&D that many companies, many sectors are not undertaking. So, yeah.
I don't know. I am really Argentine biased in this, and I wonder whether it's generalizable to Latin America. But I would say that in that picture for Argentina, you would need to pay some attention to the teachers' unions, because they seem to be quite opposed to any movement towards higher accountability in terms of quality. So in the equilibrium between, I mean, what you described about politicians prefer quantity over quality. I think unions also play well in that equation and explains a lot of the low level in Argentina, I guess. And I wonder if that's just another example of Argentina's powerful unions or something more Latin American in general.
Yeah, no, that's certainly a reason that politicians may not want to get involved in some kind of educational reform that would require, attacking basic rights of what unions consider basic rights of teachers, which would be tenure and sort of pay issues. Things like performance pay have been very difficult to do in most of the region. No, that's certainly the debate in Mexico, much more so than anywhere else I've seen. The teachers union has its own party, so it's really quite strong and has people in the ministries. So yeah, so that creates another political obstacle to coalition building.
Let me throw some extra Argentinian bias here. Further question, to what extent this is a story about the characteristics of the labor markets in Latin America, or are we talking about the characteristic of a specific labor market in like dual labor markets in each country, right? Is this the characteristics of, if you take any country, of the labor market, or of one piece of a dual labor market with the core workers with high skills, stable jobs, and then another segment characterized by all the things you're talking about? Because when I think about Argentina, and maybe Argentina is an outlier.
Always.
If you look at the steel industry, auto industry, oil industry, those workers there, they have like really stable jobs, high skills, right, like strong unions. So do you have any idea of like numbers about like which percentage of the labor market is characterized by these traits you're talking? And which percentage is characterized by the other, more like coordinating market economy kind of labor market?
Yeah, that's a good question. I've tried to find a measure for that, and it's very difficult to get good numbers. They have precise numbers on the informal sector, because you said that's one segment, right? But as soon as you start to look at that, you see it's actually pretty fuzzy, because they'll take workers that are in small firms or self-employed. But in fact, when they do household surveys, they find that 25% of workers in formal firms are informal to some degree. So then that gets makes that number squishy. And then you find out that most university professors in Latin America are self-employed. They're contracting to the university. So they would be included in the informal sector. So you get... but anyway, say that is on average 40%, and ranging from 25-30% in Chile and 60-70% in Bolivia and Peru. But anyway, say that's one segment, and then you would say, well, there's another segment that's sort of high turnover but formal, low skill. So there's sort of, and I would put that somewhere in the 30 to 40% range, depending on the country. And then you have this core workforce that's 10 to 20%, that's fully covered by the regulations, that tends to be unionized, that usually has much higher tenure. And so that's how I would divide up the segments. And I think it's, it varies country to country. But I think those sort of lines you could do for almost all countries in the region. Even Argentina.
Time maybe for just one more question.
Okay.
I think the interesting example of the Scandinavian analogy in the dialogue with Mate is very intriguing for the sake of, they needed to save Nokia for the sake of saving not only just employment but capital preservation, right? And so when we look, and going back to these case examples of Brazil, and of course they were riding their commodity boom, so maybe we focus in even more on Chile. The need to grow capital is the incentive. It's not the need to grow jobs and job creation, right? That's the motivating force here. but we would love an industry that does both at the same time, like Nokia happened to do in its day in being ahead in R&D. What industry shifts do you see government and big industry can collaborate on to educate their people and build the jobs simultaneously? And I know, I mean, look, we suffer from the same problem here in the States. In a developed nation, you know, where can job creation come from? It's going to be a green economy. Are we going to focus in on tech, which doesn't have a lot of employment? Where are we going to invest this capital in to be the drivers for the future? In R&D, generically, it's hit or miss. We don't know where it's going to come from. China is winning on cost all across the board, and they're winning over clusters of a lot of the tech. And if Latin America is going to suck away any of those clusters as other parts of Asia have, what cluster is it going to suck? What is Chile or Brasil going to be known for beyond commodities? Do you have any foresight into that?
Sucking clusters. No, if I did, I'd be probably in another industry. But I will say this, and this goes back to the other work I've done on the business groups, and that is that if you look at these large family-owned business groups like the Mate Group or Techint in Argentina, you look at the really big firms there. They're in a lot of different sectors, so they obviously have capacity to enter and exit new sectors. So they should be well suited to saying, okay, what's the next frontier? I've been doing this for several decades, so I ought to be able to think of, you know, these are people who are in it day to day. They ought to be able to find the next sector. Maybe it's not telecommunications like Nokia, but maybe it's something related to a commodity that has a high-tech component. And you see occasionally, you know, business groups that do this. Votorantim in Brazil was the one that they said, okay, we're going to do venture capital. We have extra funds, we pool funds from various firms, we can do venture capital, well, why not? And they did it, and it was very successful, but not as successful as pulp and paper, not as successful as orange juice. So they closed it. So what this says to me is that these groups have a capacity, both the managerial capacity and the ability to hire the kinds of people they would need to do some higher technology activity. This is where the government would have to come in and say, okay, these, you know, here are these incentives for you business groups to rearrange your capital allocation to do these sorts of things, or here are the penalties if you don't, sort of to make it worth their while to do something beyond low-cost commodity production. But the capacity, that's what the key is, that in that kind of diversified structure, there's a great deal of capacity for diversifying into new, higher value-added, higher tech sectors.
Right.
Thank you very much.
Thank you. Thank you for your attention.